good afternoon everyone. Welcome to Havoc News episode.
With the disastrous effect of pandemic COVID-19 that affects the whole economy globally,
in today's topic, it is about the low interest rate environment. Commonly, low interest rates will lead to cheaper borrowing. As COVID-19 shattered global economies and pushed countries to recession, central banks worldwide have taken action to ease interest rate to resuscitate consumer spending and financial liquidity. Interest rates play an important role in the financial system by determining the attractiveness of assets all over the world. Here we are about to hear perspective of view from few affected parties, which is the consumer, borrowers, businesses, last but not least the crucial sector, our government. With that, we have Iman to deliver reports from the consumer sector.
Since March, Malaysia has been on deflationary mode. Because of that, many are struggling with the rising cost of living. Accumulations of savings have been affected, and consumers will have to think of ways to make up the shortfall. Consumer Price Index has declined by 1.9% in June from a year earlier, which led in a drop in the transport component on lower fuel prices. Maxgrow Wealth Education, Sdn Bhd Managing Director Nicholas Chu suggests that depositors should park their money in their ETF accounts as the returns provided. APF declared a total dividend of Rm 45.82 billion for 2019, 5.45% or Rm 41.68 billion for conventional savings, 5% or Rm 4.14 billion for Sharia savings. Economist Lee Heng Kueh, Executive Director of ACCCIM Socio-Economic Research Centre (CERT), says it's time to reevaluate our income portfolio and determine whether there will be enough cash buffer to sustain our spending during a prolonged economic downturn. UOB Research Senior Economist Julio Goh recommends that savers and those with excess funds who are keen to participate in the country's post-recovery efforts to consider the Rm 500 million Prihatin Sukuk, which will be issued by the Ministry of Finance in the third quarter. According to Goh, the deposit based on individuals was close to Rm 770 billion as at May. This works out to 38% of the total deposit base and about 40% of households' liquid financial assets. Thank you, and back to Bella at the studio.
Thank you, Iman. From all that has been reported, we can sum up that every household needs to avoid excessive spending behavior. Instead, they need to set up their own pool of savings that will guarantee them to survive with this bumpy economic situation we are currently facing.
moving on to the next, low interest rates would be a great news to borrowers as the cost of borrowings becomes lower, meaning to say that it is a great news for homeowners as it will reduce their monthly mortgage payment. Similarly, prospective homeowners might be enticed into the market because of the cheaper cost.
Aina Aisha to deliver a full report on behalf of the borrowers. Here we go.
Interest rate cuts are certainly positive news for borrowers as borrowing rates have gone down. In June, when the Recovery Movement Control Order RMCO was imposed from the June 10 to August 31, replacing the previous Conditional Movement Control Order RMCO, Malaysia overall banking system loan and application jumped into 45% month-on-month. The loan application were supported by household demand, up to 133% month-on-month, while the business segment saw a 7% decrease in month-on-month. Kenanga Research said that total lending growth in June came in at 4.1% year-on-year, slightly higher than 3.9% year-on-year growth in May. It remains to be seen if such rate of loan application and approval can be maintained in the coming months. The data of MBAM Research state that while loan applications are likely to pick up, but due to policy and procedures set in place by banks, they do not actually need to be completely turned into approval. It is to ensure that borrowers comply with the criteria. Due to increasing unemployment, loan growth will remain subdued. Before making any debt commitments, he reminds borrowers to ensure that they can afford loan repayment. Maxgrow reminds borrowers not to be hopeful and to be prepared for the worst-case situations. For example, you may think of lower car prices because of the sales and exemptions, but the important thing is whether you have the repayment capability. When you buy a property, make sure you have the repayment capability for the next 6 to 12 months. worst has not happened yet, as this is still the loan moratorium period. Thank you. Back to the studio with Bella.
Thank you, Aina Aisha. Low interest rates are often a sign of a struggling economy. When rates decrease, people are more likely to stimulate the economy by taking out loans and swiping their credit cards. No matter how well your business functions, it depends on the economic environment to be healthy and prosperous. Economic influence such as interest rates can help your company or hold it back. Vika reporting on the side of business sector.
Businesses are thinking of ways to increase their returns by investing into other investment options with higher yields, as the OPR is currently at 1.75%, which is very low. They may also be looking to expand to take up new loans. Right now, most businesses are being cautious in committing to new borrowings and are seeking refinancing and restructuring of existing loans. The total business loans outstanding expanded 2.6% in 2009 compared to 13.2% in 2008 during the global financial crisis. The disbursements of loans to businesses and issuance of private debt securities also slowed down as the demand for business financing weakened. If interest rates are kept low for too long, it could harm long-term financial and macroeconomic stability. Businesses and households will be in too much debt or beyond their financial capability if they are not careful. Malaysia has gone through deep structural reforms to avoid such shocks from happening again. Since interest rates had been brought down sharply since January, corporate loans growth was sustained at about 5% from April to June. That's all from me. Thank you.
Thank you, Vika. Business could have the greater impact of this pandemic COVID-19, and we can see today there are a lot of small businesses who are struggling to continue to survive.
With the downturn of consumers' behavior, meaning little spending, and this can slow down a business to a crawl because there's no way to fund innovation. Hence why we need to support these small businesses by getting their products. With the help of many, they could survive life even through difficulties.
Lastly, we have Shasmira from the government sector.
The government introduced a behemoth fiscal stimulus of 295 billion, while the central bank used its monetary policy resources in an attempt to fix the harm caused by COVID-19 and to revive the economy. Firstly, the government will eventually need to borrow to revive the economy. Of the 295 billion stimulus, 45 billion will be equivalent to 3% GDP, which require direct fiscal spending.
Some have estimated that the government could borrow 20 billion or more than what it would have already borrowed in the absence of the pandemic. Therefore, direct federal government debt stood at 823.79 billion as at the end of the March, which is higher than the 793 billion as at the end of 2019. Furthermore, the low interest rate environment may be in hand right now. Bond yields have been shifting downwards, and this means that the government will be able to borrow and refinance at a lower cost.
International Monetary Fund's fiscal monitor in April average public debt of advanced economies had plateaued at about 100 of GDP in 2010s compared with 74% in 2007, but it is now set to rise substantially as a result of the crisis.
Following the report, the IMF notes that public debt has risen steadily. The pandemic and its economic consequences will cause a major increase in fiscal deficits and public debt ratio across countries. They also project the overall fiscal deficit to widen more in advanced economies than in emerging markets and developing economies, partly reflecting a more pronounced projected economic contraction in advanced economies.
Fortunately, the general government debt globally is estimated to increase 13% to reach 96.4% of GDP this year from 83.3% in 2019. Thank you. Back to the studio with Bella.
We have come to the end of tonight's Havoc News. Thank you so much everyone for watching. Stay safe and stay at home. Till the next time.